Exchange at 25 Broad, sponsor of this webcast, invites you to visit our remastered model residences. And also sponsored in part by Trump Mortgage.
Good day. I'm Abby Overton, and this is The Real Deal. At the top of the news, foreclosures in New York City are up 42% over last year. Investment sales really heat up in the first quarter of 2007, and the Roosevelt Hotel may sell for $1 billion. That and more on The Real Deal webcast this week, but first, some highlights from this week's interview. Record-breaking sales for residential buildings have taken place all over the city recently, like the purchase of the Apthorpe at 86th and Broadway, big portfolio deals in the Bronx, and a sell-off of blocks of LaFrac buildings in Queens. But why is the market for rental buildings so hot right now? I spoke to co-founder and chairman Robert Knakal of Massey Knakal to find out. What's making rental buildings so attractive to investors right now?
Well, again, rental buildings can be compared on a risk basis almost to treasuries. They're very, very safe. Even if we were to fall into a recession, which we don't think will happen, but even if we did, rents are not going to go down because with rent regulation, they're already at artificially low levels.
Rents went up between 10 and 15% last year in Manhattan, according to some estimates. Are we going to see more of the same, more increases like that this year?
Okay, well, the estimates that we've seen are a lot higher than that, actually. They're in the 20 to 30% range, and that's a big reason why some of the properties that were slated to be converted to condominium from rental buildings are staying rental buildings.
Make some predictions for us. What do you see in the next year or two in the residential rental market?
The residential rental market.
For the full interview, click on the link below. And now for the news. Foreclosures in New York City are on the rise, according to reports from PropertyShark.com and RealtyTrack, but are still increasing at a slower rate than most of the rest of the country. RealtyTrack said that city foreclosure filings were up 42% over this time last year, but national rates were up on average 87%. Investment sales and properties under contract in the city totaled more than $31.2 billion in the first half of 2007. That means sales are on track to greatly exceed the record $34.8 billion recorded last year. Experts believe that properties will soon be going for close to $2,000 a square foot. The Roosevelt Hotel between 45th and 46th Streets and Vanderbilt and Madison Avenues may sell for as much as $1 billion. With special air rights, the site could support a tower of up to 1.5 million square feet. The hotel was recently put on the market by current owner PIA Investments, an investment arm of the Pakistani government. Israeli investment companies Tao Tsuot and Financial Levers announced they would buy the Lipstick Building for $648.5 million. The Israeli firms will own 70% of the East 53rd Street building, while investors Marciano Investment Group and Metropolitan Real Estate Investments will own the rest. A lawsuit was filed in federal court Wednesday against mega landlord Pinnacle Group and its principal, Joel Weiner, for allegedly fraudulently inflating rents, failing to make needed repairs, and groundlessly harassing tenants as part of a coordinated business strategy to boost profits and drive middle-income tenants from their apartments, according to some statements. The lawsuit was announced jointly by public advocate Betsy Gottbaum and Manhattan Borough President Scott Stringer. We are confident that this lawsuit, which was released to the press before being served on us, will be found to be without merit, said Pinnacle spokesman Ken Fisher. Giscombe Henderson recently brokered the sale of 16 retail buildings in Harlem for $50 million. 3 properties located on West 125th Street, combined with one other on Frederick Douglass Boulevard, total 35,000 square feet. It will be the highest ever paid for retail space along 125th Street. Columbia University announced it would not ask the state to use eminent domain to evict West Harlem residents in the area where the school plans to expand. But the school may still ask the state to use its power to evict some commercial businesses in its expansion footprint. The Upper East Side townhouse owned by Seagram heir Edgar Bronfman Jr. is in contract to be sold for more than $50 million, which would make it one of the biggest residential sales in Manhattan this year. The Department of Housing and Urban Development once again rejected Clipper Equity's $1.3 billion bid for Starrett City in Brooklyn. HUD said that Clipper, which is led by investor David Bistreiser, had not come up with a financially feasible plan for maintaining affordability at the almost 6,000 apartment Mitchell-Lama complex. Thank you for joining us for this edition of the Real Deals webcast. Remember to click on the link below for this week's interview. Please join us next week for the latest real estate news. I'm Abby Overton, and this is The Real Deal.